Okay, hey, thanks. Great to be here. Let me just get my stuff set up here. Make sure I can see all the questions and stuff. All right, well, hey, thanks for having me. This is the first time I've presented in this forum, so I'm really excited about it. And looking forward to giving a presentation, hopefully sharing something really useful, useful information for the attendees here. So I'm Dean Jenkins from FollowMeTrades.com, and today I'm going to talk about a system that I use of combining Ichimoku Cloud with Elliott Wave, and I call it East meets West. What happens when two great trading systems agree? And quite often when they do, profits can really be good. So in this presentation, I'm going to be actually looking at live charts. I'm going to give you a couple ideas about trades that I really like, and I'm going to be looking at trades that you're interested in. So once we go through a bit of an explanation of what I'm doing, I'll ask you to give me some symbols, some stock symbols that you're interested in trading, and I'll give my opinion using this method. But just a quick disclaimer: I'm not a financial advisor. I'm a trader, right? And I'll give my opinion, but whether anybody places a trade, that's certainly their choice, their decision, and they assume the risk for that. Okay, so here's what I'm going to walk through. And please do ask questions as we go. I'll be happy to field them. And Amit is asking, hey, is Ichimoku good for long term? Can you use one weekly? It works on any time interval, any chart, as long as you got plenty of data and any chart that's charting open, high, low, close. This method for combining Ichimoku Cloud and Elliott Wave works. The question is whether the setups are there. I'm going to show you what the setups are that I'm looking for. So I'm going to walk through these areas. I'm going to show you some tools that I use. I use Dow Theory to help confirm a trend change or the continuation. Is the trend still going on, or has it ended and changed? Dow Theory has some tools to help us figure that out. I'm going to give a brief overview of Ichimoku Cloud, a review of a very simple approach to Elliott Wave, and then I'm going to share a couple of my current favorite trades that I'm in right now and a couple I'm looking at, and I'll analyze any stock charts that you're looking at. So yeah, we're going to look at some charts in a minute, and I'll show you absolutely. Yeah, John, we are just getting started with this this presentation. So again, I'm going to talk about Dow Theory, Ichimoku Cloud, Elliott Wave, how I bring it all together into trades, and then we're going to look at some live charts, and hopefully you got some that you want to look at. All right, so again, I use these three key tools in my analysis: Dow Theory, Ichimoku Cloud, and Elliott Wave. So Dow Theory, here's a very simple portion of Dow Theory. Charles Dow developed his theories, his tools, back at the turn of the last century, so back in the late 1800s, early 1900s. And a lot of the theories, Charles Dow, the Dow Industrials is named for him, Dow Jones. So there's quite a bit to his theory, but a simple portion of it was he talked about trends. And how do you know if you're in a trend or if it's changed? And what he said was, in a bullish trend, you make higher highs, higher lows, higher highs, higher lows. And as long as this pattern continues, you're still in the trend. Well, that sounds really obvious and simple, but quite often when you're in a trade or you're watching, right, price doesn't move in straight lines, and it goes up and then starts pulling back, and you go, oh, is the trend over? Should I get out, or should I not get in? And having this set of rules to know when a trend is continuing is really helpful. So bullish trend, higher highs, higher lows, higher highs, higher lows, and as long as that continues, we're still in the trend. And we can also use this to manage our stop placement, because these higher lows are very important support levels. So I use them to trail my stops too. A bearish trend is just the opposite. In a bearish trend, we put in lower lows, lower highs, lower lows, lower highs, and as long as that continues, it's going down. All right, how do we know when the trend has ended? When the pattern gets broken. So first, we know it starts. It takes 3 data points to confirm the beginning of a trend. We get a high, higher low, new high, take out that previous high. That's when the trend is actually confirmed to be beginning. How do we know when it's over? We're going along, putting in higher highs, higher lows, all of a sudden we get a lower high, and then we take out a previous low. Uh-oh, that looks like the trend is over and the bull trend is beginning, because there's 3 data points: a low, lower high, new low. Bear trade begins, goes along, lower lows, lower highs. Boom, puts in a higher low, does not go make a new high or new low, and goes up below the last lower high. That tells us, gives us pretty strong evidence that the trend has ended. So that's just a tool that I use when I'm looking at charts. I look for these patterns. I want confirmation of a trend beginning. I want areas to trail my stops to manage the trade, and I want to know when the trend's over and when to get out. I want to stay with the trend for as long as possible, of course, right? Just like the last presenter, famous quote is, cut your losses early and let your winners run, right? Well, we got to know if we're still in the trend and when to stay with it and when to get out. Okay, so that's Dow theory. The next tool I talk about here is Ichimoku Cloud. So Ichimoku Cloud was developed by this handsome gentleman, Goichi Hasada, back in the 30s, and this was about the same time, because I'm going to talk about Elliott Wave, that Ralph Elliott was working on his series. So interesting, they were developing completely different systems that ended up working together at about the same time. But Hasada-san worked on this for over 30 years, and he didn't publish this until 1969. But Ichimoku Cloud, it means one look equilibrium chart, and I think it's excellent at identifying confirming trends in addition to using Dow theory, and it gives you a gauge of momentum of the trend. It can provide some trading signals, and it predicts in the future some support and resistance areas. So let's take a look at some of the elements here of Ichimoku Cloud. So this is what it looks like on a chart. I'm using TradeStation, so this is what Ichimoku Cloud looks like. And if you are using Ichimoku Cloud or you've looked at it on any platform, you may notice it looks a little different. I've color-coded it different than the factory settings. I'm also using proprietary settings in the various variables. But again, I think Ichimoku Cloud does a great job of identifying trends and predicting support and resistance for that trend. So let's go through some of the elements of the cloud here and talk about how it works. So the first, I've made it bold, is this yellow line. It's called the Tenkan line, or the conversion line, and it's very similar to a simple moving average. I know a lot of people use moving averages in their trading, and you could almost say that I do too, because I use these Ichimoku indicators. And so simple moving average simply takes the average of the closing price of some number of bars in the past, and the average then plots them, and then when you form a new bar, it plots it again, and that gives you a simple moving average line. It's the average of some number of bars in the past, in the look back period, okay? So the Tenkan, the fast line here, it looks back a number of periods, but it's taking the highest high plus the lowest low dividing by 2. So the average of the highest high and the highest low in the look back period versus the average of the closing price. And I think studying the extremes is more valuable, and it tells you more about what's going on in the trend. So that's the Tenkan line. It's bolded in yellow here. Here's the Kaijun line, which is the slower line. Exact same formula. It's just got a greater look back period. So you can compare this to a fast and slow two-line moving average indicator, right? And so it's just a longer look back period. And of course, just like with simple moving average, these lines, when they're going up, they indicate an uptrend. When they're going down, downtrend. And when they cross over, it can give you a signal about perhaps a change in trend. Okay, the Senku span A is the next element of Ichimoku Cloud. It's this green line that's on the edge of this shaded region. Okay, it means going first or preceding. It's funny, in Japanese baseball, the Senku is the leadoff batter in the batting order. Okay, it forms the faster part of the cloud boundary, and you can see in an uptrend it's on top, and in a downtrend it's on the bottom. It's the leading edge of this boundary. Okay, and it predicts future support boundary areas, and it's the fast line plus the slow line. It's the average of the fast plus the slow line, and then it's plotted a number of periods ahead. And that's one of the cool things about Ichimoku Cloud. Very few indicators plot anything in advance. They all have, they're all lagging. They all show you what has happened before. Okay, but it's using historical data. So, in that sense, it is lagging, but it's taking that historical data and it's projecting something out into the future, and that's unique among indicators. Okay, the Senku span B is the slower edge of the shaded area, and it's the highest high plus the highest low divided by 2, the average of the highest high, highest low, looking back a very long period of time, longer than any of these others. Okay, and so what we end up with is Kumo, or the cloud, and that's where it really gets its name. So this is why it's called Ichimoku Cloud, because we end up with the shaded cloud area, and the space between span A, span B is shaded, and that's predicting a support or resistance region. And I think that's more helpful than an absolute moving average, an absolute line, because you can go look at any charts that have moving averages plotted, and look just like here with the Kaiju and Tenkan lines, right? Price will come down to even go through them, and if you're trying to use those as an absolute stop or an absolute entry point, they're not always that accurate. So I think having a region projected is more helpful. And what we see is when we get, you know, a crossover of the fast over slow, and we get price breaking above the cloud or breaking below the cloud, that can indicate a new trend and some good entry points, right? There are some false calls. That's why we like to combine it with some other methods here. But when it's right, boom, it is right. And you can see how once this trend got started, how it really did predict the support areas, right? Price came down to it. Sometimes it'll even go into the cloud, but it's predicting a region of support that, as long as that trend is intact, is pretty accurate. At some point the trend will end and it'll come crashing down. Quite often the cloud thins before that happens, showing a loss of momentum. And you can see down here where the cloud was very thin when we broke up through it and started this trend. Okay, so that's pretty cool. All right, looking at the okay, yeah, people are asking about the recording, and our host is handling that question great. Yeah, it's recorded and be available. Okay. Amit, what's the best combination of any indicator with Ichimoku Cloud for any confirmation? I use Dow Theory. I use it with Elliott Wave, where we're predicting the next impulsive move or the corrective move. So I'm going to show you here in just a minute how we can combine these, okay? But this is the only indicator that I absolutely need. You're going to see in my chart, I have a price oscillator that helps with momentum, so that's helpful too. And yeah, Levitt, you must have joined. You're asking what the yellow and purple lines are. Tenkan Kaijun. Yeah. So if I were to rate the Ichimoku Cloud, you know, kind of pros and cons as a complete trading system, I'd say, wow, it has pretty good trend identification. In fact, I say excellent early entry potential. It's excellent support resistance. It's excellent. But it doesn't give us a target. It has no way of telling where price is going to go. There's no risk management criteria or tools or signals. There's no trade management, and it really doesn't give you an exit point. By the time the trend's over and it's broken through the cloud, you would have wanted to be out. So it's got some excellent points, but I don't think it's a full trading system. So I combine it with Elliott Wave theory. And if you're rolling your eyes and you've heard about Elliott Wave theory, you've probably seen a table like this. This is the standard approach to Elliott Wave, right? And you know, we got a grand supercycle and all this stuff, and intermediate, minor, who knows what, right? 144 pattern permutations in the standard approach to Elliott Wave. All you gotta do is memorize those and rock and roll, right? Well, what nonsense, right? I couldn't do it, and I have no interest in a system that complex. But the good news is Elliott Wave really is easy, and I'm only looking for 3 setups. There's 3 key setups that I'm looking for, and Bennett McDowell has been a wonderful mentor for me over the years, and just a resource I can go to, very experienced guy. He wrote this book, Elliott Wave Techniques Simplified. It launched about a year ago, and I was honored he invited me to write a chapter in this book. So Bennett wrote the book, but I helped on the simple, easy, repeatable approach to Elliott Wave techniques. So what is Elliott Wave? So again, Ralph Nelson Elliott, he worked on this back in the 30s. About the same time, Goichi Hisada was working on developing Ichimoku Cloud. But he basically says, hey, price seems to move, that there's a collective investor psychology or crowd psychology that moves between optimism and pessimism, and it seems to move in natural sequences of impulsive and corrective waves. And these waves can also be measured using Fibonacci retracements and extensions. They move to reasonably predictable levels. That's really interesting stuff, okay? So I'm only looking for 3 trades. I want to catch the initial impulsive move, right, with a breakout typically from a channel or a new trend forming. If I can catch that breakout, that's the most profitable, biggest, most dramatic move on a chart. If you come to a chart and it's already made its big dramatic move, then sometimes there's potential to trade the retracement. You know, trees do not grow to the sky, and stock charts do not go up forever. Right? At some point, gravity takes over, and there's some degree of correction. We can measure how far that is typically going to go with a high degree of probability. So we can measure the correction if there's enough profit potential. After the correction, right, there's a high probability of a continuation of that trend, another impulsive move, not as big as the original one, but highly probable. And so this is called a wave 5 trade. Catching the initial one is 3, the correction's 4, continuation is 5. So 3 is hard to catch because you can get some fake outs, but if you do, it's big. 4 is pretty easy, there's not always enough profit. 5 is really the best trade because you got all this history before us of a chart having followed a pattern. So pretty cool. No volume for JP. I think everybody else is hearing me okay. So you may check your system there. I think everything's going all right. ABC move, sometimes it depends on how big it is. Sometimes we'll trade ABC, but what I found is, and usually C is the best move. It doesn't show on this chart too well, but typically C is 1.5 times A. So if you got to clear ABC, C may be tradable. But there's so many charts out there that have good wave 3, 4, 5 setups that I'd rather focus on ones that are just more highly probable, easier to see. This can get a little complicated, and I like to keep my trading simple. That's it. Now, if there was a trade I was in and I was pretty familiar with how the thing was moving, I might try and catch a C move, right? But if I'm out scanning for new trades, I'm just going to look for these, and again, keep things as absolutely simple as possible. Okay, let me. The other thing that's important to note, and when we look at live charts, we're going to talk about it, is not every chart follows this pattern. And so some people get frustrated with Elliott Wave. They'll bring up a chart and they'll go, well, I just can't see the wave count. Well, that's because it's not there. You know, I typically, when I'm scanning looking for trades, I look at 10 to 15 stock charts. I have a method to drill down to, you know, take a couple hundred stocks and isolate it down to, you know, 10 or 20 to go look at, right, based on some scanning techniques and using the Ichimoku Cloud data and all that kind of stuff. I can put on a spreadsheet, I can filter it really quick, go look at 10 or 20 charts. Out of 10 or 20 charts, I'm only going to get 1 or 2 trades that meet my setup because not all charts move in really clean, clear patterns. There's not always a setup. That book, you can get it on Amazon. I recommend it. I think it belongs on every trader's bookshelf. I get no commission or whatsoever for that, but I think it's a valuable resource, and I would recommend it. It's on Amazon. Yeah. Okay, so Elliott Wave. So when the chart does meet that pattern, it's powerful stuff, right? It's falling into a pattern of, you know, collective investor psychology, crowd psychology, and it's moving in Fibonacci retracement and extension levels. It's in a known pattern, and so we can start to predict what's going to happen next after some things happen, right? Once there's a clear pattern, you know, forming, the continuation and fulfillment of the rest of that pattern gets highly probable. Not guaranteed, but probable. Okay, so this is what it looks like on a chart. After we have a wave 1 and 2, they can be very small. Again, this is, you got a little fry pan bottom, you got a high, higher, low, new high, got wave 3 forming. You don't need any indicators to spot wave 3. It's just the biggest price move, right? This is an impulsive price move. This thing went from $2 to $6. It tripled. That's big, right? That's wave 3. After wave 3, we expect a retracement. And look, Dow Theory, low, lower high, new low. Oh, and it retraced into a Fibonacci retracement zone of 38.2 to 61.8. That's exactly what we expect. There wasn't really enough profit. By the time that was proven, right, with a new low, there wasn't much profit left. So we wouldn't have taken that corrective wave trade. So now we just wait. We wait for the continuation. There it is. It puts in a bottom, and, you know, there's my wave 3 entry. We could have traded wave 3 as it came out, right? There's the high, higher low, new high, breaking out, taking, you know, it was in kind of a channel, fry pan bottom, and then boom, new highs coming in. And that was a nice entry, and we did trade this one. In fact, we're back into Vail right now. So that's a nice entry. Here it goes again. There's a high, higher low. So this initial one didn't make it, right? Didn't make it out of the cloud, and it didn't go put in a new high. So we're watching now. High, higher low, new high right out of the cloud. Boom. We got a wave 5 target zone. We got a great trade here. That's how it works. So we catch these as they break out of the cloud, as they put in this Dow confirmation of a trend with a high, higher low, new high. Jim says wave 4 could be complex and triple zigzags, and yeah, it is. Wave 4 can be tricky, so that's why we only take them when there's a super clear setup and when there's a lot of profit potential. And if not, we just let them go and move and try and trade the impulsive waves. But sometimes all we have, in particular sectors is corrective wave trades. And after a stock has been beaten down, like if you look at some of the oil drilling stocks or retail or whatever, biotech earlier, some of them are coming up now, right? They got beat down from $100 down to $5, and then they put in a bottom. That correction, even if it only goes to 10, right, from 5 to 10, that's a pretty good trade. So wave 4 corrections can be tricky, but sometimes they have tremendous profit potential, and there's good reasons to trade them. So this is what it looks like. We can also, so if I use Elliott Wave and I kind of add it here to my scorecard for a trading system, well, it does an excellent job of giving us price targets, right? We use Fibonacci extensions and retracements, and it gives us a very clear exit point as we hit the target zones, right? And then, but I'm still missing stop management, trade management, so I use Dow Theory. You can see here we set our stop at previous lows, and then as the price goes and makes higher highs, higher lows, new highs, we just trail to the previous highs. And let the, we want to stay with the trend for as long as possible, right? You got to know when to cut your losses, got to let your winners run. We let our winners run by trailing our stop up to previous support periods, because when we make higher high, higher low, new high, that low is an important support level, and we want to have our stop there. And what's important about that is if price does come down below it, this pattern of the trend continuation is broken, and it's probably over, so we definitely want to get out. So we just trail it up and let this thing run for as long as it will. I take profit along the way in thirds, but what I love to do, what's part of my trading plan, is to keep trailing my stop on the final part of the position and let it get stopped out. I rarely close the trade without a stop order. I let price tell me when the trend is over, and I let price stop me out. That's how I go about it. So when I add Dow for trade management, then I've got trend identification, early entry, support resistance, price target, risk management, trade management, and action point. I've got systems working together that give me excellent scores in all areas of things that I need to trade. So Evan's saying off the bottom, if a stock makes a higher low and then a higher high, off the bottom a higher low and a higher high, then the first move ignored. Well, I'm going to look at some real charts and I'll give you an example, because I think you might have got it backwards. Okay, it takes 3 data points to confirm the beginning of a trend using Dow Theory. I can't go to your link there, Chris, but if you got an actual symbol, I would be happy if it's part of the data feed here. That looks like a 6-letter symbol, so I'm not sure I'm going to be able to bring that up. But hey, let's look at some live charts. I'm going to share a few trades that I like right now. And so which ones would you like to look at? Yeah, and Chris, if there's an actual symbol there, I would be happy to show that or pull it up and give my my opinion on it. Okay, and Amit wants weekly candles. What symbol, Amit, would you like to look at there? So Abby would like to look at WUSA. But let me go to the question about coming off the bottom here. So there it was Evan, right? Let's blow this up. So this actually is a good trade right now, by the way. This is ACIA, Acacia Comms. This looks nice. And here we go. Here's wave 3. It's this big dramatic price move down, right? This thing went from $128 down to about 40 bucks. That's pretty dramatic, isn't it? And now what do we see happening? Let me blow up my vertical scale here so we can see price movement really clearly. Here's my Dow Theory thing, right? We had a low, we have a high, higher low, new high. It just took out that high yesterday, right? So we've got confirmation, highly probable, of a trend forming. It broke the cloud. It broke it here, but that was the first move. We want to see that pull back and then it run, right? High, higher low, new high. And it broke that previous high. It's up above the cloud. That is awesome. Now we can use my rules and go, here's the low, whatever that wick value is, that's where we would put our stop under that previous low. And what's our price target on Acacia? Well, we use Fibonacci retracement lines. This is a retracement, right? Correction. This is the impulsive move. This is the correction to it. So we're going to measure where we expect it to retrace to. Fibonacci 38.2 to 61.8. So this is the price target zone, right? We're expecting it to retrace between $69 and $89, sitting here at 49. And this has a good reward to risk ratio because this is our stop, this is our entry. So we just compare the distance from here to here and here to here, the bottom end of the zone. That's got about a 2 or 3 to 1 reward to risk ratio. That totally works for me. I want high reward to risk ratios on my trade. So ACIA, that looks like a nice long for me right now. Good entry with a stop at about 41.26 and a target, call it 70 bucks. Target is 70. That won't happen instantly, and again, it will move up. You know, it'll high, higher, low, high, higher, low, high, higher. You gotta be patient. That's going to take a month or two to play out. And those are the kind of time frames I trade. I'm typically 4 to 6 weeks in a trade. Let it run. Okay, let's get back to your symbols. That was a good one. Let's see. I moved and then got way out of sync. There we go. WUSA, and that is for Abby. How am I doing on time? I'm pretty good. So this is like zero volume and all these little candle bar. This is very weak. There doesn't appear to be hardly any trading volume on WUSA. I wouldn't touch it, Abby. Can't analyze it without enough data. Sorry. XBI for Jim. So this is the Spider Biotech. So we had a big move down, big impulsive move down. The correction is this, it's too big. It broke the pattern. So once it breaks out of the expected pattern, you can see that the retracement here was far too high. It went above 76.4 Fibonacci, so that's too far. It breaks the rules. So this could be a new impulsive move up when we start looking for a short, but it hasn't really started down yet. We do have some nice momentum. I said I use this price oscillator. It's called the Optimum Wave Locator from Trader's Coach, same guy that wrote that book. We do have growing momentum to the downside. We've got a nice low, lower high. If it breaks down, we could treat this as an impulsive move and be looking for a correction down on XBI. Not ready yet, though. And not the best pattern out there because of that big move and the rules getting broken before. So I'm not going to be trading it, but that's the kind of the analysis on it. PTLA for Mark. So Portola Pharmaceuticals. So there's a impulsive move if we ever saw one, right? It paused a little bit. We might have thought this was 3 and then 4 and then 5, but this is now 3. This rules. Look at how big the momentum is, how big this is compared to this, right? So this is all now actually wave 3, and now the next move would be down, but it's not ready yet. We do see growing momentum down here. We do see a low, lower high. We need to see this break before we could take it, and we're looking for a retracement on this if it gets proven. It's not there yet. So it would have to put in a new low and break the Ichimoku Cloud down here, and guess what? By the time it does that, we're too close to the target zone, not enough profit in that corrective move. So after that, there may be another impulsive move up. So this could go low, lower high, new low, down into the zone. then start back up. That's where the trade would be, is in the next impulsive move, but you have to wait that out. It's probably weeks or months out in the future. AMD. AMD had a good year, didn't it? Good run. It actually tried to correct, then tried to continue. We had a wave 5 target up there, but it looks like it's failing and it's down under the clouds. So we could be starting a pretty good correction now on AMD, actually. And the new target for AMD would be, I got to get more data on the screen before I can do my tools. Here we go. There's the high. So the target's down here. This would be the upper edge of the target. Your stop would have to be about there on that lower high. So that lower high, we put in a new low. We would wait for a new low. Actually, it didn't put it in. It doesn't look like. One tick. I'd like to see it close. So our entry would be here. One, good solid close below these candle wicks here. Not a ton of profit. In fact, the stop is bigger, so that's not a good trade for me. Sorry. We'll find a good one. SPY is super interesting. I'm gonna do my analysis on the cash, right? And then SPY is just following it. I think it's a little bit cleaner. It's the same pattern, but it's just a little bit cleaner. So this is the S&P 500 cash, right? What we got going on here is, obviously we're in a bull market. We've been in a bull market. Amit wanted to see it on a monthly chart, so let's do that now. This is a good chart to look at. It looks the same, right? Works just the same on a monthly chart, right? And we've been in a bull market since 2009. No surprise, everybody knows that. That's a long time, right? If we look back, bull markets don't last forever. They eventually correct, and this one will too. But on a daily chart, here's something interesting. So here's the election back here. So the election happened and this thing started taking off. So we've been in a big impulsive move since the election. And since then, look how deep price is into the Ichimoku Cloud at this time. It went down and touched the very bottom. It's up off it a little bit, but nowhere else did it go that deep. And we got kind of a nice low, lower high, new low, right? Lower high. If it comes down and breaks, it gets a good clear momentum break. I'm saying, not just a wick or, part of a body, but a good candle close at about 2401. We may have something going down here, but not quite yet. It's just early, but it looks more probable now than it has since the election. So that's something pretty cool. So there, Amit, you got to see it on a monthly chart. We got to also knock out the S&P 500. Nike. So remember I was talking about Ichimoku Cloud and the fact that a lot of people get frustrated because they'll look at a chart and they'll go, I can't see a waveform. I can't get the wave count on that one. Well, here's your poster child for a chart that has no Elliott wave count, no structure to it whatsoever. It's an absolute mess, right? There's no pattern, there's no structure, there's no trend on Nike. It's just swinging wildly all over the place. Completely untradeable, in my humble opinion, using my trading method. ULTA. Okay, so this is a more orderly market. There was the impulsive move. Get a little more data on the screen. Right, big impulsive move. Here's the correction already, and it made it down to the zone. It's too late, right? It's at the bottom of the retracement zone. So all you have to do is wait this one out and see if there is another bullish move coming up. Maybe a ways off. It may have to consolidate and go through its correction there first. John, why do I trade so long time, weeks, months? Well, why do you trade so short? Right? Everybody's got their own approach, right? I like the slower pace of trading. Spending my time finding the absolute best trades, putting the trades on. It takes very little time, and then letting them run. And there's I day traded for quite a while, and I don't care to sit in front of my computer all that time, and I've just found that with larger time frames, you have to have, your stops are larger, your positions are going to be a little bit larger. But for me, I've been the most successful at it. 60-minute to one day daily charts. I'm comfortable there. I'm profitable there. I like it, so that's why I do it. And Amit says multi-bagger only possible in the long term. I think that's a true statement for 99%, particularly with stocks and options, right? Futures is a different thing, right? Okay. Hey, I got a quick offer for you. I've been having fun analyzing charts, but I do have a quick offer for you, and you're probably going to like it because the price is really good. It's free. So hey, I'd like to invite you to my live trading room. What we're doing here, analyzing charts, looking for them, we pretty much do that. Well, no, we do this every day. So let me throw a link in to the chat area there. I got a little tiny URL so it's easier for you to type, but let me post this link in here and send that to the entire audience. Okay, you got the link. So here's what we do in the live trading room is I'm looking for stock trades, right? I'm not day trading. I'm looking for stock trades, and I'm looking on daily charts and 60-minute charts, just like we've been doing here today. In the live trading room, what I do is I call out trades, and then I track them to conclusion, right? Most of the trades I take with my own account, but sometimes my capital is tied up, and I still see a good trade, and I want to share it with the people in the room, so I'll just be clear which ones I can take, which ones I'm not. But whatever trade I call out in the room, I track it to conclusion, we manage it, we take profit, we move the stop, I give an option contract that I like for the trade, and I track my performance. And so right now, for closed trades in the trading room, we started tracking them this way in Q2 this year. We have closed 30 trades, got a win rate of 57%, and then a payout ratio. So this is the most important statistic. The winners are 2.2 times as large as the winners are 2.2 times bigger than the losers. So in a $50,000 account, we're at 25% profit since the beginning of Q2, since we started tracking it this way. So that's not too bad, right? A $50,000 account, you've made almost 13 grand. Those are closed trades. We've got open trades, which we track here on this. If I put them on a spreadsheet, I put all these trades on the website every night, so people can't attend the room every day. They still get updates on what's going on, if we're moving the stop or scaling of a trade. But the open trades, we've got about $5,600 in profit based on a $50,000 account position size. And then we also have a watch list. So these are trades that we're waiting to go into, and we're tracking these in TradeStation. And again, I throw them on a spreadsheet, put it in the room on the website so people, can go download it or whatever. If they can't make it to the room, they can go check out what's going on. So, yeah, I've got lots more videos and webinars. I got a couple hundred videos up on my YouTube site. You're welcome. It's just go to YouTube and type in "Follow Me Trades," all one word, and you'll find my YouTube channel. I didn't bring a link for that. Okay, so that's the offers. You can get a free week. Come check out my live trading room. If you like this analysis, you like what I'm doing. The analysis on charts we were doing there is pretty similar. We're just looking for those setups, those 3 key setups, using a combination of Ichimoku Cloud, Elliott Wave, and applying some trade parameters like risk to reward and identifying the stop. And then I call those stops out. We track them every day, and we got a pretty good win rate and a good profitability. And love to have you come sit in for a week and see if it's a good fit for you. So the link is posted in your in the chat area there, and it's on the screen. And I got about 3 minutes left, so I'd happy to take any other questions that you have. For we got to move on to the next. You got Corey Rosenblum coming up. I know Corey, and he's a great guy. You're going to enjoy his presentation too. Yeah, Jim, my average trade time is 4 to 6 weeks on daily charts. On 60-minute charts, we're in about a week to 2 weeks. Time, oh yeah, trade. I should have put the time up here. If you click the link, it's going to go to a registration page. It's Monday through Thursday, 6:15 a.m. to 7:45 a.m. Pacific. So that's 9:15 to 10:45 Eastern. So we're there 15 minutes before the open, and then we're there for an hour and a half, taking a look at what's going on in the market. We analyze when big news events come out, how the impact is, and we go looking at different sectors. We do a lot of scanning and identifying trades. We identify about one trade per day on a stock, and then we identify the option to trade it with as well. No, I don't do any day trading, hon. Simple buy and sell, that's right. You know, we do our analysis based on the underlying chart of the stock. And then once we have, you know, an entry, a target, a stop price, good pattern on a stock chart, then we go decide what the best option play on it is. And I like to keep things very simple. In an uptrend, I go buy a call. In a downtrend, I buy a put. And, you know, you hear, you know, 80% of option buyers lose money. Well, we're in the 20% and make really, really good money because we have a very specific way of managing that, of picking the right contract. We never let them expire. We never get into theta decay. We are very profitable with the option trading. All right. See you there. Okay. Look forward to it. Again, it's only during this session. If you sign up during this session, you can get the free trial. And that link will hopefully stay there even after I'm off. But once the webinar is over, once the session's shut down, no more free trials. Just for the folks online who sign up today. Limited number of people can do it. So, you know, if you're really interested, a handful of folks sign up. I'm glad to have you there. Okay. Well, I think that's a wrap. Sure, good to be here. Thanks for all your questions and your interaction. I really enjoyed it. And now it looks like I'm going to turn it back over to our host. So thanks for inviting me, and I hope to come back one of these days.